One of the legal obligations placed upon directors and those running a limited company is that of submitting accounts to Companies House and also submitting potentially a corporation tax return. Over 3 decades here, the idea of dormancy crops up quite often for me and my team. And in this week's video, I'm going to be outlining what the idea of dormancy means for those two regulators, not only understanding the concept here, but what they mean for those two different bodies, what you need to do about that if your company is actually dormant and what you don't need to do. And let's crack on with this. And I'm going to aim to do this in as simple a language as possible. First of all, what does the idea and the concept of dormant mean? Now, your company, whether it's by shares or by guarantee, a CIC for example, is considered dormant if it's not doing any business, i.e. it's not partaking in any trading activity and it doesn't have any additional income, for example, investment income. However, the term dormant itself can mean different things depending on whether you're dealing with Companies House or HMRC or Her Majesty's Revenue and Customs, if you want to be more precise. 2 different bodies and 2 different languages, 2 different meanings. Let's consider the idea of dormancy, first of all, for when it comes to Companies House. Now, you as an individual running your company may think you've not a great deal going on, very few financial transactions, but that doesn't actually mean it's dormant as far as Companies House is concerned. And even if your limited company is dormant, inactive, there are no financial transactions, there are still obligations placed upon you to file, for example, your confirmation statement. It used to be called the annual return, by the way, as a heads up, and also those annual accounts that you must submit to Companies House. Irrespective, if the company is still registered, you must comply with at least those 2 obligations. Even if your company has no activity and it's inactive as far as corporation tax is concerned, that doesn't negate that responsibility for filing accounts to Companies House. If you don't do it, by the way, there will be a fine that follows. Now, there's some good news here. If your company is considered both dormant and it qualifies as a small company, you can file dormant accounts. Instead of preparing a full set of accounts, looking at the bank, looking at all the creditors and debtors, then you can just file something called dormant accounts. It's far simpler, and obviously depending on the size of your organisation, it may mean that you don't necessarily need to do an audit with that as well. Now, you need to make sure you understand completely what's included in those accounts if your company is small and your company is considered dormant as well. Now, Companies House considers your company dormant if the following applies. If it has not had any significant transactions during the financial year that we're looking at, then it's considered dormant. But here lies the problem. What does it actually mean by significant transactions? Lucky for us, Companies House provide a bit more guidance on this. So it does not include where you're paying fees across to Companies House, for example, for your confirmation statement. It does not include penalties that you might have to pay for any late filing of the accounts. It doesn't include money and funds you're paying over for the share capital that you've acquired when the company was incorporated. Now, if you do recommence trading, then you don't actually need to inform Companies House that you started trading all over again. So it's not unusual. Your circumstances might be such that you create the company, don't actually do anything with that company, but you still have that filing obligation. You don't need to tell them when things become of a more energetic basis. Now, your accounts that you do submit when they become active or you pause and then restart would include a section where it makes that reference to dormancy. Now, what about the situation for when it comes to HMRC, more specifically for corporation tax? Now, your company is normally dormant for corporation tax if the following applies. It stopped trading activity and it has no other income, such as investment income. If it's a new limited company that hasn't commenced trading yet, then that will be classified as dormant. If you happen to be an unincorporated association, which comes under the corporation tax rules, by the way, or a club owing less than £100 in corporation tax, then you are classified as a dormant company for HMRC purposes. And as a final roundup, if you're a flat management company, typically found in the context of property, then you are classified as dormant. So what do we actually mean by trading activities? Well, trading includes activities like where you buy and sell goods or provide services, where you rent out property, when you're incurring costs on things such as advertising, employing freelancers, employing staff, or earning interest off bank deposits. So what's the consequence when HMRC are aware and consider your company is dormant? You may receive a letter from HMRC, to remember those things, stating that they've decided to treat your company or association as dormant. For future purposes, by the way, folks, it's a very similar situation if you're considered inactive and no need to sign a personal return. That's a topic for another day. Now, you do not have to pay corporation tax or file corporation tax returns if that situation arises and your company is classified as dormant by HMRC. If you don't, by the way, and you fail to file a return, then you will be subject to a penalty of at least £100. So what do you need to do when your company is dormant? Well, you need to make sure HMRC are aware your company is actually dormant. If your company has actually started trading and then it takes a break, so it's stopped, and it's got no other income, then you need to inform HMRC that it's dormant again for corporation tax purposes. It has an impact on the account they set up for you and your ability to file a corporation tax return. Now, if you've already filed a tax return or received a notice, and that notice is normally issued by HMRC that says, essentially, we want you to submit a corporation tax return, you still need to file a return, and in the vast majority of cases, that return has to be submitted online. Now, this lets HMRC know, this big august beast, that your company is dormant for that financial period. Now, once you've informed HMRC your company is actually dormant, you do not need to pay corporation tax or file another company tax return, unless you receive a new notice from HMRC. Please note though, folks, the caveat is, by the way, that if something happens in that period and your company becomes active again, it's your responsibility as the taxpayer to actually make sure HMRC are aware and informed and you file the tax return accordingly. Now, you still need to file, as I said, those annual accounts and confirmation statement with Companies House. The exact content and requirements depends on the size of your company and whether you are seeing yourself as actually dormant according to Companies House regulations and rules. Folks, I hope you found this useful. And if you've got any challenges or not quite sure what your compliance requirements are with Companies House or HMRC, then please do check out the show notes here. There's a link to find out more. Check out our YouTube channel where we've got lots of resources there. I hope you found that useful. And again, remember, dormancy is not about being completely inactive. It has a different meaning for HMRC and for Companies House as well. Until next time, stay active.